What's going on, guys? Welcome to today's session. In my opinion, this is the most formative session of the week. Yeah, we're gonna dive into a couple key things every month where we get to go back and forth, right? Where you guys get to ask key questions, whether it's about psychology, mindset, your technicals, money, risk, the system-based things, anything having to do with the trading and investing side. So yeah, we open this space up to have a Q&A. So I'm gonna rifle through questions that I've received from you, getting feedback is one of the most, by far, just one of the most useful things, especially as a trader, because every single trader goes through a very different process. We have different paradigms, we have different beliefs, we have different personalities, so we endure different barriers, right? We have to break through different things, and then our weaknesses might be a lot different, just like our strengths. So I wanna dive in here and rattle off some answers. Someone asked here, I was seeing some YouTube suggestions about a video saying to not create goals, but to create systems. So he said, I wanted to ask you about your opinion and viewpoints and how you'd approach that type of mentality. So I agree, 100% agree, especially with trading. And I guess the key thing comes down to, how do you define goals? How do you define systems? And so goals usually has to do with an outcome. Right? Goals usually is, I want to make or accomplish this by this time period. So as a trader and an investor, going for daily percentage goals, going for weekly, monthly goals, whether it's in dollar amounts, like, oh, I got to make this much money or this percentage, whatever it might be, especially can be very tricky because our focus, our concentration is in what do we get? Whereas in systems, a system has to do with what's being done. So when you have the right systems, which we can, for this example, I think we could substitute that with processes, then we know, okay, as long as I am executing my entry strategy, exit strategy, my risk management, as long as I'm preparing the way I'm supposed to. So if these things, if these processes are running at very high levels of efficiency, then it's pretty hard for the outcomes, the goals, not to happen. The time aspect of things also is where things can get pretty difficult, because at the end of the day, like, you can be a great trader, you can be an amazing investor, but it doesn't mean that the result that you want is going to happen that day, that week, that month. But in my experience, as long as you have a high frequency, so you're accomplishing things the way you're supposed to, for especially the longer the better, it's so much likelier for things to happen. Like, it's just going to be so, like, your attention and your energy is not so much like, you're not measuring yourself. I'm like, oh, I'm profitable or not today. So, like, how does your attitude shift if your overall, the way you measure yourself changes too? So yeah, I definitely love the mentality, especially in trading, because if every single day it feels like a tryout or a measure of your skill, if only you're basing yourself off of the outcome, I mean, statistically speaking, the greatest hedge funds in the world, they're also wrong pretty frequently. So yeah, I think it's all about how you process, like, everything based on the process. It just allows things to go well, and then you're not forcing anything. But yeah, that's a super good question. All right, another question. Can you share your take on the mindset and perspective to have as you transition from live account to actually becoming profitable? Taking into consideration you have already built the proper evidence needed on your demo to even go to a live account, but now you're live and getting to a place where you're profitable and scaling such withdrawing. So this is a good question. So, and correct me if I'm wrong, because this one's off of the live chat. But basically, you're saying you're at a point where you have proof, you have your documentation, you have like a projection or a trajectory where it's super positive, and you feel like you're ready for a live account. So what does that process actually look like? So, one, demo trading. It's going to be more likely that you actually follow. Actually, it can go either way. On a demo account, depending on your personality, either, since there's not stakes, like real stakes, it may be easier and your efficiency rate might be really high, which means that you're actually doing everything exactly how you're supposed to. Also, there are some people where kind of whether it's ego or pride is in the way where you just can't seem to take demo seriously. So, that's another whole thing to tackle on. But let's say you are, and your demo is basically giving you a green light where you've tested your systems, things are going well, and your expectancy is profitable. Cool. As you transition into a live account, my suggestion would be this basic suggestions. Start with an amount that you feel pretty comfortable with, and that at least for sure you don't have a timeline on needing that money back. Now, even if you're trading with proper risk management, let's say you did need that money back pretty much ASAP, you should be able to, it shouldn't be a big problem to just withdraw. That shouldn't be a problem. But either way, you don't want it to have a weight on you. Whereas you feel like so much pressure to trade that account, where not pressure as in you're not taking it serious, but pressure where now you're overthinking everything, you're not actually executing properly. So start with an amount that is kind of a sweet spot where you'll take it seriously. It's not, creating unnecessary stress and pressure. But since it is the first time you're undergoing that live account experience, guys, it's unfamiliar territory. It's unknown territory. You will be a little bit nervous. You will be maybe a little bit anxious. But remember, if you've been doing this right and you've been focusing on the processes, on the right systems, then just keep doing that. Now, what I would say is this, and in the demo, it's a little harder to do. So in a live account, this is kind of where you're going to start to realize what works for you. But this is where you want to think about your risk threshold. So now that you're live, let's say you're starting off with, $1,000. Okay, so you want to ask yourself a couple questions. If I were to go on a losing streak, what kind of risk percentage would I be able to execute without breaking my plan, without getting undisciplined, without getting emotional? So let's say you're risking 1% on the demo, and now that you're going into a live environment, well, if you were to lose 1%, 1%, 1%, 1%, 1%, now you're down 5 trades in a row. Would losing like that, would that influence the next trade? Would that influence your decisions? It might. Being down 5% in just a couple days, that could. So maybe you dial back and you just start with a lower amount and you start to ease into it. You go, okay, cool, you know what, let me start with the 0.25%. That way a losing streak, I'm still able to trade properly, and a losing streak, the one trade that kills the losing streak, if your risk reward, depending on your risk reward, it might get you right back in the game. So you don't want to get in your own way when you're going about trading live. So first thing is that, you kind of want to think about the worst case scenarios, not so much in I'm going to blow my account, but so much in if a normal thing happens, which is a losing streak. It's normal. How do I work with that? How do I handle that? So how am I prepared for that type of moment? So that's what I would start there. And then getting to a place, so now that we've kind of taken away the risk aspect of things, okay, scaling and withdrawing, it kind of has to do with what your goals are and also what your financial situation looks like. So I firmly believe that funding your live with the frequency of how money comes in is so valuable. If you get paid weekly, you should fund that weekly. That's just what I do. So I would start with a percentage of income, and as you go on, it'll be easier for you to be able to do that. So for example, let's say whatever you make, you start by depositing 5% of your income into your trading account. Okay, and then you realize, okay, I can live without this. I don't need this money. I'm super comfortable with this, and I'm not stressing anything. Everything else is taken care of. Awesome. And then over time, push that. Okay, can I do 10% of my income into my account? 15, 20. So you want to, if you're being financially savvy, because trading also requires money intelligence. It's super important. then, because it's not just about your skill as a trader or an investor, it's definitely how you use your money is so important. How you manage, if you have any debt, what your liabilities look like, how you're building up your net worth, all that definitely comes into play. But it also depends on what your long-term vision is. Is this trading account basically some sort of retirement fund? Is this something where you're looking to withdraw, at a certain frequency? And I do believe that when you're starting your first live account, and if you're up, whatever, 1% or 2% after a couple weeks, or even after your first week, I love the withdrawal, the quick withdrawal, because something about that first withdrawal, something about that, just like, it really boosts the belief system. It really shows you, and you show to yourself, like, we're doing this. Like, this is actually a thing. It's real. So I definitely believe in that. I think give yourself a withdrawal. See how that influences your belief on your skill set, what you're capable of, maybe even 2. But once you kind of get that out of the way and you're like, okay, this is real, I'm capable, like, all right, cool, we're doing it, we're really doing it, then think about where you want to kind of be. So if you are depositing a certain amount every week, every 2 weeks, every month, and at that pace, okay, kind of where do you want to be? Where will you look like? Withdrawing, I don't think trading is something that should be substituting your income until you're a few years down the line. If that even, it doesn't have to be. But at a certain point, eventually your capital is high enough where, on a very average week, you're able to do that. Awesome. So I'd say if you do feel like you want to withdraw regularly, maybe something small, something really relative. But at the end of the day, I think at least my goals with trading is more so building net worth rather than withdrawing super frequently and paying my expenses with it. For me, it's kind of like a net worth scale. But also, as time goes on, you may have different types of capital. You have your own live account that you have, and you follow. This is super long term, super conservative. Down the line, you may have an account where it's you have a bit more risk that you're willing to get into. Maybe you have just manage capital in a different format. So, but that's how I would approach it. Going from demo to live, there is a change. You will experience emotions that maybe you weren't on the demo, and so it's very much so a stress test. So all of a sudden, maybe you go from starting with 1,000 and now your account's at 900, and that could start to trigger certain impulses, and so now you're going to experience re-entry for the first time when you weren't supposed to. Now you could experience revenge trading that you hadn't had to deal with before. So that's why, like, when you do go into a live account for the first time, don't go all in your entire life savings, because there's still so much that you will learn, especially in regards to your emotional responsiveness. So yeah, definitely start with something that matters to you, but I wouldn't go all in, all savings, because you want to give yourself some room, some time to gain live account experience. So it's almost like you have demo, then you have like live phase 1, where you're getting rid of all of the mistakes and all of the new things that you'll experience, and then over time you'll basically go through all of that, and then you can start to probably invest a little bit heavier into yourself and into your own accounts. But yeah, that's a fantastic question. How do you deal with being down a big percentage mentally, and how do you adjust in your trading? So with this question, there's the what can you do so that doesn't happen? So the preventative answer, and then when you are in that situation. So I'll answer directly the question, and then I'll give you some perspective on how you can just not be in that position. So now, if you're down a big percentage, what do you do to adjust in your trading? So at this point, you got to ask yourself, how did I get here? Was it a one trade that just got out of hand and you lost way more than you were supposed to? Was it high frequency of trading and you just went on a crazy losing streak? Maybe you just kept chasing a certain idea, and so you ended up taking a whole bunch of trades. So depending on that answer, you may have to completely reevaluate how you approach your trading in terms of risk management. So if you are down a certain amount, then how you got there really, really matters. So, but either you drop down your risk percentage, but only if you had it wrong to begin with. Now, if you're down a big percentage, but you're trading big anyways, you have to understand, okay, well, if I change my risk percentage now, assuming it was consistent the whole time, it's going to take you longer to get back, even to break even, if you do drop your risk percentage. So let's say you were risking 1%, 1%, 1%, and now you're down more than you would have liked to be. Here's what people do. Either they'll elevate the risk or they'll diminish the risk. So they'll lower the risk or they'll elevate the risk. Both have cons. If you drop your risk percentage, then let's assume that the next trade that you take, that's the winner. That's the winner. And now you're like, what? Because now the risk to reward payout isn't the same, right? Let's say you would have hit a 3 risk reward. Instead of making 3% back, let's say because you dropped your risk percentage, you only made 1.5% back. So now you just it will just take longer, and you have to deal with that. So it's not really fair to you if your first 5 or the trades you were taking had a higher weight to it, and now because you feel like you're going backwards, you're changing it. In reality, if you are down more than you wanted to, but you were doing things right, then you got to give your trades enough time to play out. Not like individually, but your trading system. Have you given yourself 50, 100 trades of doing things right? Because according to your evidence, you should be profitable, right? So sometimes you just need to give yourself more trades at the same system, as long as you're doing things well. Now, let's say you're down a decent amount, and now you want to bring up your risk percentage so you make it back faster. Super dangerous. If it works, it worked, and you almost feel like you got away with it, because really you did. This is very tricky, because if you don't start getting into your win rate starts getting higher, then all of a sudden these bigger risk trades, they're going to send you back further. And trading isn't so much about black and white, you're positive or you're negative. It's more like, how does this trade also influence my decision making? How does this trade influence my emotional intelligence? So at the end of the day, that's why the really big factor is, why are you down what you're down? That makes such a massive difference. So hopefully that helps. Someone asked here, I started being consistent with placing and tracking trades in the last 4 trades. I got 2 wins, 2 losses. In both losses, I experienced slippage. Now I feel weird about a risk reward if it's going to happen frequently. So yeah, that has to do more with probably the asset that you're trading, and that maybe how tight your stop loss is. Slippage is the thing. I mean, it's always going to be there. Some brokers are better and worse than others, and sometimes it's the asset class. So like, if you're trading on the 1 minute time frame indices, and if you have certain brokers, yeah, your slippage might you might end up losing, and let's say you risk 1%, you may end up losing 1.2 just because of slippage, or also the environment. So 1, cross-reference different brokers. 2, what instrument are you trading? 3, what time frame? So if you're giving yourself a 10-point stop, I mean, for it to slip into a 12-point stop, it's not that crazy. You might just be trading very, very tight zones. And then lastly, is there other fundamentals, kind of what's going on in that? What you can immediately do just to mitigate that would be kind of bake in the slippage into your risk already. So let's say you're going to let's say your normal risk is just 1%, just to keep it easy. Then maybe you actually risk 0.95, and then you kind of already are baking in that slippage risk that adds onto it. Next question. In your experience, what is the best way to enter that flow state as a trader? I feel experience could be the best answer, but I feel there's a little bit more to that than just experience. Flow state. So flow state, I mean, there's a lot of different things that can add on to this. At the end of the day, I think there's a certain piece that you're looking to get into, or a certain rhythm, a certain like vibration. And I think everyone has a different way of doing that. For some, music might get you into that rhythm where you feel super connected with what you're doing, your energy, your high place of energy. For others, it definitely can be calming the mind. So, meditative practice prior to trading can get you into that flow state. For me, that's always worked. Getting some physical activity in before I trade. So those, I always feel good doing that. How well you can get into a state like that will also depend on how often you've been trading. So for me to tap into a certain focus with the market, with my decision making, because I've been basically showing up and doing this for 9 years straight, like every single day, it's I don't know, it happens very, very easily. Like, it's just, you kind of just like, my brain kind of just knows, like, it's time to lock in. But also, I would say that you have, know yourself and know what gets you into a high frequency state, because for some, cardio or lifting may not be what does that for you, right? For others, meditating, it might be everything. Music, just like, dialing in, headphones on, just getting into that kind of energy space, that could be it. So I would say, like, one, just kind of listen to yourself. And also, a lot of it does have to do with the physical state though. So whether you have, you're super hydrated, maybe if you've been up already for an hour, 90 minutes or so, you have some caffeine in you, coffee or something, some tea. But the physical state is definitely important. And for me, one thing that I definitely underplayed for a long time was sleep. Just rest in general. You're gonna feel better, more rested. So those are all things that help. For me, sleep has not really gotten in the way of it, but I am realizing with a very good amount of sleep, it is a lot easier to just function. When trading, do you think it is better to keep your risk the same across all your trading setups, or to alter your risk percentage on each setup depending on each strength? The answer, I think, is what do you have proof on and what can you follow? Usually, what's more simple is the easiest to follow. Create a hypothetical situation, right? There might be a trading setup that you follow that gives you a 45% win rate, and it gives you a 3 risk reward. So your outcomes are amazing. Honestly, that's fantastic. And you may have a certain risk percentage with that, and you always follow that. But you want to have enough proof that that's pretty much expected. If you have a different type of trading setup, then the question is, why would you risk more or less with that one? Is it happening more often? Is it happening less often? Is the risk reward better, or just higher? Is it lower? So I think for most people, especially in the first couple of years, have one quality entry setup that you take, and just master that. Use that, because at the end of the day, you have to just be good enough as a trader. It's not about being, it's not about being, like making 100% a year, which really nobody does. It's just about being good. And then you start to refine. And one of the things that happens that I've definitely done is we just like to tinker with things. So something's working, and then we just get bored or whatever. We just start to do things, and without having enough proof. So you'll start to mess with certain things, and then you end up getting worse results. So I think keeping the risk percentage the same is really valuable. If you want to play with a different setup, then just demo that other alternative setup that you might have. Test out what's your win rate look like, what's your risk reward look like, what's the overall like profitability that you can expect with that. And once you have enough proof, then introduce it to your system. Start with the lower risk percentage, and just so that you're emotionally not getting influenced. Not that it won't pay you out or not, it's just that, okay, if you have a different risk model, and you have to think about it like this. And I'll answer this, I'll finish answering this with this in mind. If one setup is working really well and the other one is working okay, then is your overall trading like attitude, trading, character, is it being negatively influenced by the other one? So is one setup actually now getting in the way of the other? So Yeah, you said in your question, you said each setup depending on its strength. So it just depends on how do you measure how strong a setup is. So for example, like I trade basically like mitigation type of setups. Those work really well for me. That's for sure my best setup. Then there's like certain trades that in an imbalance in the market, under certain circumstances, you can take an entry there. In my experience, that has a lower win rate, but it might be different for other people. And so maybe you trade that with the same, with less, maybe you just don't trade it at all. At the end of the day, it's just about the proof. What does the proof tell you? What does everything you've documented about it show you? If someone is on a losing streak and doubt, discouragement is at an all-time high, what have you done / recommended for that person to review or reset and approach this in a healthy way? First of all, you have to ask yourself some key questions, which is the following. Let's say I'm on a losing streak and I'm starting to doubt and I'm discouraged. Okay, what caused the losing streak? Because at the end of the day, what we want is to get to the solution. We want to get back to get to a positive attitude, not for the sake of just be optimistic for no reason, but because you might just be you might have a twisted perspective to what's happening. So, are you still actually trading the system? That's the key thing to ask yourself first. Are you in a losing streak based on your system? Yes or no? If the answer is yes, you're doing everything the way you're supposed to, but you're in a losing streak. Okay, now then we can say, okay then, you as a trader, your execution is perfect. All right, so let's look at the system. Have market conditions changed? Have I adapted to a trend? Was this, maybe your trading model actually was only working under a bull run, but in a downtrend, maybe it doesn't work. So, okay, cool, you go and evaluate the system. Now okay, it's not me. I shouldn't be discouraged because of me. I just need to reevaluate what I've done. If I've made something work before, I can do it again. Now, if the doubt or discouragement, if you're in a losing streak because the losing streak itself is kind of leading to bad trades, is leading to poor decisions, to emotional impulses that you're unfortunately following into, then okay, hey, look, the losing streak itself is making it worse. You haven't suddenly forgotten how to trade. You haven't suddenly, it's just like we're really focused on what has just happened instead of being present and just approaching what's in front of us. So a good thing is just to where should the focus go? Should it go towards the system? Should it go towards emotional responses? So where should that go? Because then you can read it. Now you can direct your focus. Maybe all it is that you're in a 4-trade losing streak, which in reality is a very small amount, but your risk is so big, so it feels so much worse than it really is, and you're just one win away from kind of getting back in the game. And then you can just take a look at that. Like, am I just super zoomed in and I'm not looking at the big picture? So we'll do that. But and I'll say this, guys, like, if you plan on doing this for 5, 10, 20, 30 years, the rest of your life, then does 2 weeks of poor trading really matter even? Like, so that's the biggest thing is like, whether it's losing streak or win streak, if you zoom out enough, does the emotion of the moment really actually matter? Because like, just so you guys know, like I had a disaster start to my career. Like, it was awful. Losing streaks or winning streaks, but somehow I was still losing money and it didn't make any sense. But at the end of the day, if you know and you can make it happen and this is going to work for you eventually, then just take the emotion out of it. Go, okay, here are the facts. The facts are I'm losing, and the facts are this is how I'm losing. So, okay, what do we need to do to fill in the gaps? Now, if you're on a winning streak and ego or greed are creeping in, then you need to remember you are not on a winning streak. The system's on a winning streak. You're executing really well. And the reason, right, that your system's on a winning streak is because your efficiency is high, because you're following the process. But you also have to know that within this trading system that right now is giving you very good outcomes, very good returns, within the system, losses are baked into it. Same thing goes to the losing streak. Losses are included in the system. So if you're winning, these wins are also included in the system. It's not out of the ordinary. So you really shouldn't have super high peaks and super low drops, because these are kind of things that are supposed to happen. It's not like, for example, if your win rate is 4 out of 10, it's not going to be like all happening in order. You win one, you lose one. You win one, you lose one. You win one, you lose. Sometimes it's you win 3, you lose 4. You win 1, you lose 3. Sometimes that's just how it goes. So have that all packed in and realize, but at the end of the day, the market decides. The market decides. We just find little edges so we can get the most out of it. Okay, perfect. Someone else asked, I remember you answering a question to someone who is having trouble passing evaluation because they're using 0.3%. I believe you said that during that you may want to adjust up to 1% to pass. Is that something you could elaborate on? Obviously, once passed, reset your risk percentage. It makes sense. Yeah, so your risk percentage, it just depends on why are you struggling. Traditional trading there's no time limit, there's no percentage gains that you need to accomplish. You're just trading. So what usually gets in the way is just time for people. People are just in a rush to validate themselves. They're in a rush to, oh, look, I made it. And so then they want to up the risk a little bit to make it happen. But I only think risk should go up if it won't get in the way with your trading. So like if you were to go on a losing streak, okay, well, which is bound to happen, will that risk percentage end up just giving it all, like will you just give it all back? Which you don't want, So yeah, I mean, some people may be trading too conservatively and you maybe could afford to up it a little bit, but you don't have to up your risk in multiples of, 0.25%. It's completely whatever you want. Yeah, at the moment, guys, this is, I think these are all applicable. Like these are all things you can go and apply to your system. And maybe you're not there yet, right? Maybe you're not trading live yet, but now you kind of have the next steps for yourself. Like, okay, now I know kind of what to keep in mind when I'm doing my live, or now like, okay, I'm gonna experience unknown emotions, and it's all a test of how you work with it. I really believe trading is a relatively spiritual experience. Like all it is confronting different aspects of yourself, and you're either going to pass or you're going to be, failing. Doesn't mean you're a failure. It just means like, all right, cool. Well, the way in which the situation happened, I did not do that well. And maybe you have to pay the price with losing a bit more than you wanted to, or a lot more than you wanted to. But it's just, it's the outcome of your decisions. And so that's why, like, regardless of the outcomes, I kind of feel like it's always fair. Like you kind of deserve it. And when you have that mindset, for me, it's I don't know, like I don't really get very much, at least upset with the market, because I feel like it's a fair game. All of it really comes down to your own decisions and the quality of your decision making. So yeah, I mean, go ahead and apply, guys. This is why these are for, right? You hear people say, something like smart people learn from, their own mistakes. I don't know, geniuses learn from others or something like that. But yeah, much love, guys. Enjoy the Q&A and feel free to share. So much love, guys. Appreciate y'all. Feel free to share this later on with any other trader, and I'll catch you guys on the next one. Peace.